Hello traders, Gary Wagner here, just about 10 o'clock in Honolulu, 4 o'clock in New York. It is Tuesday, 6th day of October, 2015, and this is the Daily Report for Gold and Silver. After a day of consolidation, meaning yesterday in which we had, in essence, an unchanged market in gold that traded off about $2 on the day, we do have a continuation of the surge that really began on Friday of last week. We do have gold trading up about $11 to $12, $11.4721. It's traded at a low of 35 and a high of 51. Now, with the market trading at 1147, it's currently sitting flush up against our current resistance area, which is 1147.34. So we're right at that area. It looks like we're going to close or settle right at this particular price point. Now, this particular 23% retracement level is really derived from the entire rally that happened when the market moved from 1071 up to 1171. So this is a pretty critical area, because if we break through here, our next real area that we'd need to see taken out, of course, would have to be 1157. And as you all are aware of from our longer term studies, our weekly and monthly studies, that 1156, 1157 area is a pretty critical area, because it is in fact a 61% retracement of the rally from $700 to $1,900. And traders, you can see from our monthly chart, and that's the chart that we have up now, we are really getting close to that particular area. Now, of course, once we zoom in, we get a better sense or feel for what we have been witnessing in this market long term. And even with this move up, although I am modestly bullish, and we've absolutely found some real support and a bottom at the 1092 area, and that, of course, is our line in the sand, so to speak, because it's a 50% retracement from the move of approximately 300 to 1900. We're getting devastatingly close to this area, and a break above that, to me, would signal a return to a real bullish mode within the market and a bullish rally. But there is a major caveat. And that caveat can truly be seen on a weekly chart. I'm going to blow this up to a certain level so that you can see the action really beginning in, call it July, August. That's when we had the market come up and peak at around 1450. Now, since that point, and we're looking, of course, at a much bigger picture, obviously we've had this bias that's been down. It has been characterized by a series of lower highs and a real consistent series of lower highs throughout. And this last high, this last lower high coming in, came at around 75. And now, unless we break above first, of course, as I said, 47, which is our current short-term resistance, then 56, and then 71, unless we actually see this market break above this particular price point, we cannot make the claim that we've gone out of the fact that we have seen a series of lower highs really over the last year. And the same can be said for the lows. When we take a look at the lows, these lows are about equal here, so we'll disregard this one. But if we look at the low, and these lows, we have had a series of lower lows and lower highs. So although I am, as I said, modestly bullish on this market and believe that there is some great possibilities ahead, we really have a couple of hurdles long term that we need to overcome. Because traders realize that over this time period, and as I said, we're looking at a period of roughly a year and a half, almost 2 years in terms of a time cycle, we have had a couple of points in which, as we look at these higher lows here, there have been a couple of points where we have seen the market actually give us a low that was higher than the previous low. When we compare this low here to here, this low here to here, and now as this market has moved down, we've gotten this low, and we certainly, if we consider this rally and then this correction here taking us to 1100, we certainly have gotten now a higher low. So to meet any kind of criteria that's going to make me bullish more than moderately and more than short term, we really need to see a higher high come in play, because without that, we are still drifting to lower ground day by day, month by month. And the most significant characteristic of this market moving to lower pricing over the last couple of years is the fact that although we have had occasions where we have actually made a higher low than our previous low, there has not been any occasion during this last couple of years in trading in which we've made a higher high. And so to me, that is the rationale or the reasoning behind why I believe a higher high is so important. We really need to, at least long term, take out 1171. Short term, we've got to go through 47, of course, our current level, and then 56, that critical number that puts us back above a 50% retracement of the long move from 300 to 1900. Now, in terms of the precious metals, there has been some real excitement. The real excitement has not really come in gold, but rather a couple of our white precious metals, silver, palladium, and platinum. Palladium and silver particularly. Now, silver is up another 1.5%, about 23 cents on the day. When we look at our daily chart, you can see that we've seen this market run away, but more importantly than this spike up is the fact that this spike up has taken us over some critical levels of resistance. 1550 to me was a pretty critical area. You can see that just roughly by looking at these tops that came in here. You had one other area where we attempted to reach it and failed, but at this point, we have seen the market literally barrel right through that area. We had support at 1450, that held well, and then when we consider this really almost a nominally, this spike down hard in which the market traded to $14, we've had almost a $2 gain in the price of silver roughly in the last 2 months. So traders, to make sense of our current levels of resistance, we really have to bring in a new fib retracement level. Of course, prior to this move or spike up, and we're looking at a daily chart. Now on this daily chart, we have defined different levels in here. We're now looking at this point here at 1772. That was the prior top before this market came down. We were using these tops right in here prior to that, but now when we do that, we have a couple of new levels that come into play. Our current level of resistance in silver comes in as a 50% retracement of this move, as I said, from 1777 down to about $14. We have a 50% retracement comes in at 1588, just shy of where the market closed today, 1584.9, so call it 1585, 3 cents shy of that, although it did trade into this area. And then we have major resistance, I believe, at around 1630, and that, of course, is based upon this fib study. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.